Hi, welcome back to part 2 of this 3-part web series on NASDAQ index options. I'm John Coker, and with me is Dennis O'Brien, Registered Options Principal at Webull Financial. Today, we will be placing a live index option trade on the Webull platform. But first, a few disclosures. Options are very risky. They are not suitable for all investors. To learn more about options, you can read our disclosures along with the OCC booklet, The Characteristics and Risks of Standardized Options, available at www.webull.com/disclosures. Lastly, all content in this video is for educational purposes and should not be construed as investment advice.
In this video, we're going to be placing a trade in the micro-sized NASDAQ 100 index option XND. XND is based on 1/100th or 1% of the full value of the NASDAQ 100 index. The NASDAQ 100 index is currently trading at around 15,700. So that means XND, the NASDAQ 100 micro index, is trading at 1/100th of that, at around 157. The notional exposure on one option contract for XND is the index value multiplied by 100, so 15,700, give or take. John here is going to place a trade to go long on a near-the-money XND put that expires tomorrow, while I will go long a near-the-money XND call that also expires tomorrow. XND does offer weekly and monthly expirations, but just for simplicity's sake, we chose an expiration for tomorrow. Here we are in the Webull trading platform. You can see here that I have the options chain for XND open, along with a widget for the quote of the NASDAQ 100 micro index and the underlying XND index's chart. Using our filters in the option chain, I selected single leg options and just calls. The NASDAQ 100 XND micro index is currently at 157.53. So I'll scroll down to the near-the-money options just outside of this shaded blue region and select this strike, 158. The current bid and ask prices on this contract are 41 cents and 51 cents. So right now, to buy the XND call option, it'll cost a premium of $51, which is the ask price of 51 cents multiplied by 100. The max loss on this trade is the full amount of the premium, $51. In order for this option to break even by the expiration date tomorrow, the index will need to close above $158.51. That's the strike price of this option, plus the full premium we're paying. You can create an order entry ticket by clicking on the ask price, which pre-populates a limit order. I'm going to go ahead and submit this order for one contract.
Now, for my trade, I'm going to buy a long put. Here we are in the XND options chain. I've got it filtered by the November 17th contracts and just puts. So the 157 strike is trading at 39 cents by 49 cents. So if I was to buy it at the ask price, it would cost $49. $49 is the most I can lose on this trade. By clicking on the ask, I can pre-populate an order entry ticket. I will buy one contract at a limit price of 49 cents. The order's been filled. You can now see the position in the Positions Monitor tab. Now that we've got our trades in, let's take a look at how you can analyze the market using the Webull trading platform. As you can see here, there's a lot of features available that you can use for market analysis. Two of my favorite indicators I like to add to charts is the moving averages and the relative strength index. I can easily add those to a chart by selecting the indicator I want. I know the 5, 8, and 13-day moving averages are popular with day traders who use it to confirm up and down trends. So I've added those here in red, white, and blue colored lines. Another great indicator you can use to analyze options are the Greeks. If you're not familiar with the Greeks, I encourage you to study about them in our Learning Center, but I'll give you a brief overview here. As you can see in the call options chain, we have delta and theta listed. This delta of 66 means that for each 1 point that the underlying index goes up, the price of the option should go up by 66 cents. Now for theta, it shows a value of 37, which means that for each day that elapses, my option price should lose 37 cents in value. Note, these indicators are theoretical and they assume all other variables are held constant, so it's not like looking into a crystal ball. But the principles of the Greeks hold true generally, so they can still be useful in predicting how the options may behave and analyzing your trades.
That concludes our video on how to place an order and analyze the market on the Webull platform. Join us in our next video to see how our trades perform and see an explanation of cash settlements for in-the-money index options.